Welcome back. So, a good question is, do you think that regulators are pressuring banks and other financial services, like legacy financial services, to break away from cryptocurrency firms? I've always thought this was the case, especially behind the scenes. They're pretty heavy-handed, out in public, especially with what we've seen just go down with Kraken and what's probably going to follow suit with Coinbase. But this article, just out of Cointelegraph, really kind of highlights the reality. Binance Swift banking partner set to ban USD transfers below 100K. This was last month. And this really does price out a lot of just regular people that want to be taking part in cryptocurrency, and it really is just allowing for the bigger players. More interestingly, though, banks under pressure from U.S. authorities to cut ties with crypto firms. And this is an article that was released about an hour ago. United States authorities are allegedly discouraging banks from offering services to the crypto industry. They don't want you to be outside of the legacy financial system. That's just the reality. The elites don't want this, and they're doing everything that they can to make sure that it happens. United States authorities appear to be resurrecting past techniques to crack down on cryptocurrency firms and banks offering services to the industry, several sources have told Cointelegraph. The alleged strategy consists of isolating the traditional financial system from the cryptocurrency market by relying on multiple agencies to discourage banks from dealing with cryptocurrency firms. And these are the alphabet agencies, the SEC, the CFTC, the FTC, with the goal of leading crypto businesses to become completely unbanked. And that's what they want. This is according to Nick Carter, co-founder of venture firm Castle Island and crypto intelligence firm Coinmetrics. The claims rely on conversations Carter had with bank executives, including crypto native and traditional banks, he told Cointelegraph. They tell me they are facing immense pressure from the Federal Reserve, who is the biggest money printing scam corporation on the planet, and the FDIC, Federal Reserve. I'm sure most people know this, but they're not a federal entity. It's just a private company. They don't get audited, and they print all the money in the U.S. Just throw it out there. And the Federal Reserve and the FDIC, the Federal Deposit Insurance Corporation, founders are telling me that they can't get bank accounts anywhere for new startups. And you might say, well, this is probably because of things like FTX, Genesis, Celsius. That might be the case. But the banks right now are facing a major credit issue. They don't have enough money to cover deposits. It's basically what's going on. And it's about to become a reality in the public in the next couple of months as the bail-ins start to really take place. So if you have money in your bank account, I would suggest taking it out, putting it into gold and silver, because they're going to be using your cash to cover their debts. That's just the reality. And so when they're trying to basically stop people from getting their money out of the banking system and perhaps into cryptocurrency firms or decentralized finance, this is something that threatens the banking system heavily. This would put it already on its knees to right on its face. He's quoted as saying, regulators threaten and bully bank leadership behind the scenes, then publish public guidance stressing that banks are still free to custody crypto or service crypto clients. In reality, they are not free to do this by any means. And so, they're bullying them behind the scenes, more or less, and then out in the public pretending, oh, we're not really doing that. But like I said, you just saw Kraken shut down its staking services, and it looks like Coinbase is probably going to follow suit. Other recent regulatory events, including a joint statement released on January 3rd by the Fed, the FDIC, and the Office of the Comptroller of the Currency, warning about the risks of banks engaging in crypto and encouraging them to refrain from doing so due to safety and soundness. Of course, it's always about your safety. Anytime the alphabet boys try to tell you something new about regulation or try to restrict you from doing something, it's all because of your safety. Remember the lockdowns? Because of your safety. Everything about control always comes with the guise of, we're just doing it to protect you. Concerns also last month, Binance announced that it would only process $100,000 transactions. And again, I really do think that this really just prices out the average person. I mean, you know, what average American or average Canadian or average person in the UK, is going to, be transferring 100,000 US dollars to the Binance exchange. It's only going to be bigger players. And so that really does price out the small guys. And this is due to a new Signature Bank policy. On December 22nd, Signature Bank announced its plans to reduce crypto services, return funds to customers, and close their accounts. The bank reportedly borrowed nearly $10 billion from the U.S. Federal Home Loan Bank system in the last quarter of 2022 due to liquidity issues related to the bear market and the collapse of the crypto exchange FTX. FTX just showing how toxic it really was to the entire space and even outside of the regular crypto space into the legacy financial space. Again, why I stress more and more every day, self-custody is the only kind of custody that anybody should be promoting, and you should be getting your cryptocurrency into the DeFi space and take advantage of the decentralized financial apps that exist and get a yield on your assets outside of the centralized system. Another quote here: there is particular concern with crypto exchanges and regulated intermediaries that operate outside of the United States because their choice of jurisdiction usually focuses on maximizing profit. What corporation doesn't do that? Usually to the detriment of the consumer or customer. Aaron Kaplan, CEO or co-CEO of blockchain fintech Prometheum and counsel at law firm Gersey Kaplan Nasbaum told Telegraph. He explained. And I'm probably butchering this last name. Sorry for that. Banks are reevaluating whether to continue to provide these services and whether it's worth the risk. The only risk is the scrutiny of the SEC. And from what we can see here, if these claims are true, it's the scrutiny and the bullying they're receiving behind closed doors. Another priority for U.S. regulators is apparently to ban crypto staking services. And we just saw this. Brian here was talking about this on Twitter yesterday, and then Kraken today has shut down its staking service after feeling the pressure from the SEC. We are hearing rumors that the SEC would like to get rid of crypto staking in the U.S. for retail customers. And I do think that Coinbase is going to follow suit with Kraken. I think it's just inevitable. These techniques are not new. In 2013, a federal government regulatory initiative called Operation Choke Point targeted a variety of high-risk industries and heightened supervision of financial institutions providing services to these businesses. Impact on crypto firms. The consequences for the crypto industry could range from reducing retail holders' ability to exchange coins for the dollar in addition to crypto exchanges closing operations in the U.S., which is going to be terrible for the market overall. I mean, if you think the bear market's been bad now, this could really send us to some lower lows here. Market and lack of access to financial innovation, said Carter. He believes the move could lead the cryptocurrency industry to return to the earlier days. It's a return to the bad old days of 2014, 2016, when getting funds on exchanges was insanely difficult, and there are no positives from this. And I guess I kind of agree with that. You want some liquidity out there. I'm not opposed to that at all. But ultimately, what we need is decentralized on-ramps and off-ramps to the DeFi sector. We need DEXs with the ability to onboard and offboard clients that want to use their services but want to do it in a decentralized way. And with local Bitcoins going down, which was one of the major peer-to-peer buying and selling exchanges, there's another wall there now. And so this is going to be harder for people that want to get into the space and they want to do it in a decentralized and anonymous way. We're going to need to see a new part of this industry kind of birth. That's what's going to have to happen. Is this is going to have to be some kind of Cambio or like a decentralized Cambio come in. And if you don't know what that is, if you've ever been to the Caribbean, a Cambio is a way to kind of exchange your cash for either the native currency or back into US dollars. In Jamaica, this is a really big thing. A lot of Jamaicans, when I was there, they would use the Cambio for doing that. Kaplan believes that the crypto financial services ecosystem is evolving to come in line with established regulatory frameworks, meaning that the companies in the space will need to embrace regulation or perish. And that is a threat, ultimately. That's definitely a veiled threat, if not an outright threat, especially using the term, like this is a quote, he's saying perish. In contrast, Carter predicts that the initiatives will be unproductive for the industry and retail investors, absolutely empowering shadow banks and further delaying its development in the country. And that's just the truth too. It's like anything else, right? If you try to stop it, it's just going to go to the black market. They seem to believe that they can cut off crypto users access to the next FTX by harassing banks. That's not true, because blockchains and stablecoins already exist. They are naive. The real object is to stem the growth of crypto in any way, and that's the truth. Yeah, they really just want to stem the growth of it. They want to stem the growth of the DeFi space. They want to use digital currencies. I mean, they're trialing CBDCs right now in basically every single major country, and they will be a thing, and it will definitely be tied to some kind of digital ID and a health pass, and this is all going to happen in the next few years. And stemming the growing industry of DeFi will help them strengthen their own CBDC and their own centralized digital control of not just a currency, but also of, the way you travel, your access to healthcare, everything will be all kind of centered around these CBDCs, these digital IDs, and these digital health passes. And you can call it a conspiracy all you want, but I mean, it's a reality now. A lot of people tried to say that wasn't going to happen back in 2019 and 2020, but they were all shown to be proven wrong. The Federal Reserve and the Office of the Comptroller of the Currency did not immediately respond to Cointelegraph's request for comments, and I don't expect them to respond at all, because they're not beholden really to anybody anymore. These alphabet companies, especially things like the Federal Reserve. I mean, the Federal Reserve is not even audited. They print the money for the United States dollar system. Nobody knows how much debt they have. Nobody knows what assets they have at all. It's just print endless money. And yeah, I guess it was good for the cryptocurrency space in 2020 and 2021 because Bitcoin's price basically relies on it now. Ultimately, though, it's toxic for the entire ecosystem. But again, I think things like that are by design. Nonetheless, I'll link this article in the description. Tell me what you guys think about it in the comments section. If you enjoyed the video, please leave me a like, consider sharing it, and subscribing to the channel if you want to see more content like this. I will see you guys on the next one. Take care.